great to be back here again at Capacity Russia with you all. I'm especially happy to be sharing the stage with our good friend Sergey Shafkanov. And as you know, he will be giving you some very interesting insights into the local Russian market. Before he does that, I'd like to give a bit of a more global snapshot view of Russia in the context of international network development. And as such, we're going to take a look first at international internet development in Russia, and then the co-location market. And then we'll take a look at some pricing trends as well. All right, so let's get right into this. We're in looking at international internet development. The general trend over the last number of years has been that internet capacity growth, it's been fairly robust, but it's been growing at a declining rate. The current global compound annual growth rate in internet capacity is about low 30 some odd % compounded annually. That is also the general rate of growth for Europe as a whole. Eastern Europe has been outpacing Western Europe in terms of the growth rate in capacity, about 38% compounded annually right now, and Russia is right there at or a little bit above that growth rate. So if you look at a sampling of countries here in Europe, Russia is one of the faster growing markets in terms of its connected international capacity. If we look down to the city level at the actual amounts of capacity that these different metro areas have, certainly in Europe, the big four European destinations are by far the largest. But I've got the Eastern European metros here in red, and as you can see, Moscow is the largest of those, with about, I think currently about 6 terabits per second of international capacity connected. Now, where does this capacity connect from Moscow? So this is the share of destinations for capacity connected to Moscow. And certainly, as you see here, nearly 50% of it goes to those top two destinations, Frankfurt and Stockholm. Frankfurt's the largest single destination, but Stockholm is growing at a faster rate. The top 5 destinations altogether account for about 70% of Moscow's connected international capacity. I wanted to highlight the mix of carriers who offer international capacity here in this market compared to other markets. So what we're looking at here is if you consider the top 20 carriers who offer international capacity in these markets, what share of that aggregate capacity is offered by domestic carriers versus international carriers? For most of these markets, a vast majority of that capacity is being offered by international carriers. In Moscow is the flip side, about 70% being offered by domestic players provisioning their own capacity internationally. So switching over to the colo space briefly, like with the international internet markets, certainly the major European hubs, London, Frankfurt, Amsterdam, have the largest retail colocation footprints. But again, compared to the rest of Eastern Europe, Moscow has a sizable footprint, actually even a little bit bigger than that of Stockholm, which is certainly more of a major destination, but Moscow has a larger retail colocation footprint. A majority of the gross retail space, about 64%, is actually fitted out usable colo space. And again, to take a look at the mix of operators provisioning these services. So in this figure, if you read left to right, this is a sampling of markets looking at the largest 5 retail colocation operators in each market. Those in red are predominantly international players. Those in green are predominantly local to those markets. And as you see, Moscow is the exception to all of these in that the five largest retail providers are all local. There's certainly data space is working with an international player, Telehouse. So switching over to pricing, we're going to look first at transport price trends, then IP transit, and then lastly, local access pricing. And as you're going to see, there's kind of a mix of trends here. So when it comes to transport rates, we hear a lot about price erosion all the time, certainly, and that's affecting carriers in Russia as well as elsewhere. But I think what this figure illustrates is that while there is price erosion here, there's price erosion elsewhere as well. And so what happens is the premium on the price for routes connected to Moscow doesn't really lower compared to that in other places. So for example, if you look at London, Moscow versus Amsterdam, Stockholm, over this entire period, there's been about a 300% premium in price for the route connected to Moscow. For another comparison, if you look at Amsterdam, Moscow versus Frankfurt, Warsaw, the gulf has actually increased from about 300% to 400%. So when it comes to transport pricing, there's still quite a bit of daylight between the prices for routes connected to Moscow compared to other destinations in Europe. It's a different picture though when we look at IP transit, much more competitive. Routes or the IP transit rates in Moscow have dropped dramatically over the last couple of years, and reaching very much close to parity with rates seen in Western Europe. So for example, if you compare IPT rates in Moscow versus Stockholm, the premium for Moscow has dropped from 160% at the beginning of this period here in 2012 down to just 35% now. And on a global level, Moscow rates are even lower compared to other destinations. So firmly in this low cluster here, the Moscow rate in the $1 to $1.40 per megabit range compared to say Tokyo, which is in the $5 range, or Sao Paulo, which is much higher. So lastly, local access pricing. So when we talk about local access, we're talking about the price for a circuit from a non-POPed building to the nearest POP, measured by circuit size and distance. So this would be a fast E connection between 0 and 15 kilometers. While the price for a fast E connection in Moscow would be relatively expensive, it's not incredibly higher than other destinations. It's less than 30% higher than the price for the same circuit in New York, for example. Although if you compare it closer to home, if you look at the Frankfurt rate there, the premium is higher. It's more like 100% premium. So just a couple of thoughts in closing about general trends that we see that certainly affect the local market here. We certainly see the growing viability of 100G, both from a cost perspective and the pricing perspective as it's passed on to end users. Certainly, we're consistently seeing pricing in the 4 to 5 times multiple over 10G, and sometimes lower. And so as we see 100G taking off here, this will certainly fuel the expansion of international capacity and transport price erosion as well. Another major trend that I wanted to highlight is the growing influence of private networks. At TeleGeography, we lump 3 groups into private networks: enterprise networks, research and education networks, and content networks. And content networks are very much the driving force in private network growth overall. They are increasingly affecting the development of networks in the long haul and globally. By our estimates, for the first time this last year, private network capacity on the transatlantic route outpaced that, was more than that of the internet. And the trans-Pacific route is not far behind. Pretty soon, content networks will account for more capacity on the Trans-Pac route as well. The development of terrestrial and subsea networks as well as local data center infrastructure will increasingly have to account for the requirements of content networks. And as far as it pertains to Russia, while the Russian market is still quite localized, content providers know that they need to be here. They have a significant customer base here, and the local content law that's just come into effect will certainly be an incentive to bring more in as well. We certainly just saw the announcement that Apple is going to be taking up colo space with Accelerate. I guess they have not officially confirmed or denied that, but apparently that has leaked. And it's likely that Facebook and Google will move in as well before enforcement of this law comes into effect in January. So these kinds of operators, I think, as it pertains to Russia, will drive the development of infrastructure and act as an impetus for the creation of increasingly interconnected ecosystems in the local Russian market. So that's all for my presentation.